crypto and options trading has large potential rewards, but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Now, we could take a quick look at the markets before we start. We got plenty of time. The markets are open now, and I was just checking headlines like I always do. This is one of my favorite things to do in the morning. I get some coffee, pet my dog, get back in bed, and start looking at news. And NASDAQ futures fall. Amazon. We're gonna hop on Amazon today, and maybe Meta. Probably Meta. Amazon's a little more risky than Meta. I want to play with Meta today. They lost $9.3 billion on their metaverse business, and they lowered expectations, and it's just getting hammered. So Amazon, Apple, Costco, Ford, Meta, McDonald's is up. So this is fun. I like trading like this. It's just kind of like it's a game. It's a fun game. Fed seen aggressively hiking to 5%. That's higher than previous, triggering global recession. That's a bit of a sensationalist news, but it's very possible. Let's see. Tech is getting hammered. Amazon, Intel pressed slash costs after years of bulking up. All right. So anyway, we know the basic news. Let's take a look and see what's going on with the open. So I'm going to go to my futures here. I always default at futures. I like to keep my eye on this. I have a watch list. If you need any help creating anything in Thinkorswim, I can help you with that too. So this is really this wide open. Bitcoin flat. That'd be a nice butterfly on Bitto. Gold down. US dollar must be up. Let's take a quick look. UUP. So these are the things I look at. UUP's up. Gold's down. Okay. Inverse relationships holding. Bonds dropping a little bit today. Oil down a bit today. Not much. Natural gas popped up. Now it's coming down. The Russell 2000. It's good to just take a quick look at all of them. The S&P 500 is up. Okay, so it's going to come up here and test this 50-day probably today. NASDAQ is up a bit. Interesting. Dow, it's rising big, probably because. Let me ask you, what do you think? Why do you think the Dow is rising so much? It hasn't even taken a dip, whereas the NASDAQ and the S&P 500 have. Any ideas why that might be?
Caterpillar jumped.
Caterpillar jumped, yeah, that's part of it. But here's a big part of it: financials. So the financial stocks are doing well. Visa, I mentioned yesterday. Financial stocks are fighting the trend. They're rising in the face of a dropping market. The Dow has a lot of bank stocks in it, and so that's why. So financials would be a good place to hang out and look for bullish opportunities. Interest rates are rising. Consumer spending, by the way, came out today, and I checked it. I can go in it. Here's what happened. So we got personal consumption expenses. PCEs, these a different way to measure consumer sentiment, and it isn't abating. It's pretty much the same, pretty much across the board. So there's no reduction in spending. There's a lifting of interest rates, and so banks are benefiting. There's no slow. GDP rose yesterday, so all of that is the banks are in a beautiful spot for profits. And that's why financials are rising right now. Okay, any questions, comments, any other additional things? What do you all look at? Anything you want to share?
Yeah, is Adidas publicly traded? I can't find the symbol.
I think so.
Just want to see if they took a hit.
Yeah, it's an ADR. I don't think we don't have that. We can't. I don't think we can trade that.
Okay.
We could look for it. I don't know if this is considered. Yeah, I don't know. We could see if it's in Tom's tools. It's not
in Tom's tool. I couldn't find it.
Yeah, it's not listed as in Tom's tools, and
Okay.
there's no options on it. That's why. Felicia, you got your hand up. I thought I saw your hand. Okay, now let's go sniping. I want to spend some time on anybody that has live trades and they're dealing with exiting or adjusting, dealing with fills, navigating that process in a live environment. That's the primary goal of today, is for me to get behind you and support you in any trades that you're doing. I commonly hear statements about, I'm trying to get out of this trade, I'm trying to adjust, I can't get my credit, I'm not sure, that kind of stuff I want to deal with and give you support on during this call. Hey, Kathy, how was your concert?
It was really good. It's very unusual music. It's not your typical laid back symphony. Lots of 5 percussions, banging, crashing, all kinds of good sounds going on.
All right, man. All right. Cool. All right. Well, let's I want to look at Amazon and Meta. Okay, either one is good. Now, Meta is going to be a better deal for us, less risk, because Meta. Oh man, this might be a good calendar spread. Or not a calendar, but a butterfly. The stock yesterday tanked on bad news. They lost $9.3 billion on their virtual meta product they're building. This whole idea of the metaverse, where reality is replicated in a virtual environment and you can participate in that environment. It's a whole nother world of stuff, and they've committed themselves to it. They lost 9.3 billion, lowered future guidance, and the stock got decimated. And so yesterday we had this big volume spike, and what I was waiting for today was for the stock to breach the low. It didn't. So I want to see where it's going from here. It's possible that stocks bounce. I think what's going to happen is the stock will go sideways for a bit. And because of that, I would be looking at butterflies, sideways butterflies, and then throw a bullish up top, bullish broken wing up top, bearish down below. So I'm going to let that one marinate. Amazon, though.
Mike, before you leave Meta,
Yeah.
has that stock split? Because it hasn't been down here since 2016.
I know there's another confirming indicator there, Andrew. I don't see any splits indicated in Thinkorswim.
That's what I was looking at.
Yeah, I don't even remember there being any splits. But if you look at a max chart, the monthly chart, I mean, geez, Facebook is getting hammered. By the way, they're getting pressure from Twitter and other social media platforms that are taking the business. The millennials are calling Facebook old book. So Facebook is losing market share and losing money on other ventures. So yeah, the last time it was this low, Andrew, was back in 2015. And so, yeah, I like this one. In fact, now I'm a little more interested in perhaps selling a short-term call spread up here somewhere where I don't think Facebook or Meta is going to go. So we'll see. I think when you get a volume spike and the stock resides within the body of the prior day, the next day, then oftentimes you'll see that stock go sideways, similar to what Zoom did.
I think there's also a Elon Musk shakeup with management and Facebook. I just saw a report on NBC News on that.
Yeah, it's Elon Musk will be owning Twitter, and he's firing I think he's paying $100 million to get rid of I know that's happening for Twitter. Is that what you were thinking, Twitter or Facebook?
Oh yeah, I think you're right. Sorry, it was a Twitter shakeup.
Yeah, that's okay, no problem. All right, so let's take a look at Amazon. Now, why do you want to do this kind of trade first thing in the morning? Well, the IV on Amazon is off the roof right now, beyond the roof. The roof is on fire. The IV is up. And so now what we want to do is start speculating about where do we think Amazon might go next? And what I'm seeing here that's creating a little bit of, I wouldn't say concern, but something to note. Let's go to a minute bar. This is the first few minutes of the day here. All right, so it gapped down, it opened here, it gapped down, opened at 97 or so, has gone up, and then dropped and back up. So it's, although it's dropped hard, it's found a bit of a floor, at least so far. Where's it going next? I mean, I was thinking it would continue dropping, but it's found support right around 97. It's hitting 100. That'll probably hold. So what I'm looking at now is I was going to sell up here, but now I'm a little concerned because Amazon is starting to rise after opening here already. A few minutes later, it's starting to rise. So the idea is to come in and snipe, sell credit spreads up here. Where don't I think Facebook is, or Amazon is going to go? Amazon. Just had to reset my mind. So I would I don't want to be selling in front of this train. I want to wait to see what the stock does now. I'm not ready now to place a credit spread. If I was, I would be looking at 110. I think I would feel confident about that, but I just don't like that the stock has bounced on the open, gap down and bounce. So I would be patient on this one and wait to maybe later in the morning and see what the stock ultimately does. I can't see Amazon fill in the gap anytime soon. So the idea, and remember, Tom's Tools shows live data at 10 a.m. So we've got 28 minutes before, or 18 minutes before that happens. So while we're waiting, what I'm doing is looking at where I don't think the stock's going to make it to. I think 100 will probably hold. It might not. So 110 is where I would feel somewhat comfortable selling. And so then I go into trade and I look at live pricing. Now, it's possible in the first half hour of the day that I might find some credit. For options that expire, this is the best kind of trade. For options that expire at 4 o'clock. So I'd like to sell at 110. Is there anything for today? If I sell at 110, is there any credit there? No, I can see there's 110, 111, no credit. So to get any kind of decent credit, it looks like I'll have to drop, for today anyway, I'd have to drop to maybe, let's see, maybe 105.
105.
Yeah, 105. There's 21, oops, hold on, try that again, 105. There's not a lot of credit. It's 6 cents on 94. So it's at 7% profit is available between now. But that's 105. Yeah, it's not a no-brainer because Facebook, keeps saying Facebook, Amazon is rising. It's testing 100. I would want to give this time to play around a bit before I would do anything with it.
So Mike, isn't there a lot of short covering going on right now? And what I've always noticed is I try to be very careful with not making some of these trades until 10:15, because 10:15 is when all the shakeouts taking place, and that's when it's either going up or it's going down. It's going to make it solid move for the rest of the day, right around that time frame.
Yeah, later in the day, I don't know if 10:15 is the exact time that happens, but yeah, later in the morning is you'll get a bit of short covering, like you said. People are collecting their profits.
Yeah.
And we get a little short covering, and so we can let that take place for a bit, and then come back later in the day, maybe in an hour or so, and 10:30, 10:15, and see what the stock's doing then.
If you also look at the news, the various analysts are still positive.
They maintain, yeah, they're maintaining buy, lowered the price target, maintaining buy. So that's typical when you see that. So the news is mixed, or you could consider that news. It's not really a downgrade. They're lowering the price target, but saying keep buying it, outperform. And you got to be a little careful with those analysts because they have vested interests in some of these stocks, and they don't want to mark it as a sell part, one of the reasons I think there's not many sell recommendations is that analysts have vested interests sometimes. Okay, so let's let that one marinate for a bit, but let's check out Meta. What's it doing? It's hanging at 100. Now, I'd like a butterfly on this, quite honestly. I would think about a butterfly on this thing. But in terms of perhaps a credit spread, we're not going to get anything for today. Let's go for next Friday. What's there for next Friday? Let's see. How close do I want to get? I would love to get to 120. I mean, if we sold a longer term one at 120, I think that would be a really good bet. I believe this is going to be more like Zoom and just sort of drift sideways around 100 for a bit. That's what I'm thinking is going to happen. So selling at 120 would be really safe. But right now, unless we go further out in time, we're not going to get any credit. See, let's see what we can get for 7 days out. Let's see if there's anything there. So you notice I'm not using Tom's tools, and I'll use them in a minute once the data comes in. So there's nothing at 120 through November 7. Iron Condor actually would be really good on this one. Yeah, I would look at an Iron Condor when the data comes here in a minute. No, there's
So
no
Mike, the other question I've got for you, I mean, one of the things I like doing is knowing that time value is going to go away over the weekend, that even if you pick up something for next Monday early on, you could still let time, be your savior and make a couple extra bucks.
Yeah, that's why we're doing this on Friday.
Yeah.
We want free time to count Saturday and Sunday.
Well, I mean, if you look at Microsoft and Google, the two that we did yesterday, right now they're not where we want them to be, but, knowing that time is going to get in their way over the next 2 days, Monday, it should finally, start coming where we want it to be. I mean, Microsoft and Google are moving because the Qs are moving, Amazon's moving, Apple's moving. Kind of like you said, be careful because of, the Apple earnings. And I mean, Microsoft has actually moved about $4 already.
Yeah, I'm just looking at the trades here.
Yeah.
We've got Microsoft right here. I did these yesterday on the WhatsApp feed. So here's Microsoft. We sold at 240, which is up here, and it's up a little bit today. And then we also have Google, which is we got 15 days left in this one. Google is up a little bit today. Let's see. Yeah. So yeah, we're in good shape on this. Google's short strike is up here at 98. So we're in good shape on both. And the other thing you can do on these is you can sell on the other side. So if you start seeing Google make a run up to this break even, then come underneath and sell a put spread underneath. It's like a boxing match. Stock takes a shot at you. Stock rises, gives you a kind of a punch, and then you come back and punch with a credit spread underneath. So those are the kind of adjustments I like to do on my short-term credit spreads. This is a game where you're going to get hit. So if you don't have a taste for taking on this trade, you could easily lose $200 on this trade, having risked 462 if the stock hits up here. And that's going to happen. It'll probably happen, I don't know, 1 out of 4 times at least. You're going to get hit 25% of the time on these, and you've got to be comfortable with that in order to take on this kind of a short-term strategy. I exclusively did this for 10 years. This is what I did. And I got hit all the time. And I didn't like it anymore. I said, all right, well, let me do broken wing butterflies instead. Okay, now, let's go back to Meta real quick here. Let's see here. The problem with Meta is there's no resistance anywhere. I mean, we could say 110 and 120, but the stock is drifting at 100. If the stock was at 110, I'd feel better because I could sell at the bottoms of these bars. So I like to sell where it's been before recently. That's a strong resistance at 120, and that's why I want to sell there, but it's so far away from 100 that there's no credit. Let's do one other thing quickly. And again, I'll be able to scan for this in a minute, but let's look for the lovers and, no, sorry, here we go. The top 10% losses on the NASDAQ. And this is another way to ambulance chase. And we can sort this by the stocks that are dropping the most. That's not the one I want. So LMAT, La Matière Vasculaire. Does it have options? I don't know. It does, but slippage is gargantuan. Next, PTCT. We could just start. Yeah, see the slippage is too wide on a lot of these. Z-Lab, too wide on the slippage. Avatar, Avantor. Oh, you know what I got to do is take this back to single. There we go. Okay, I don't see anything really interesting there. So let's go to the New York. All right, here, see, I didn't hear about this one. Slippage is wide, but let's see what this stock is. This is Carlisle.
Wow.
Yeah, slippage is super wide right now. That might tighten up. The first available options are November the 18th, 21-day options, but the slippage is gargantuan. It's untradeable. Let's try this one. This one's a little better, but still 20% wide. Let's see what the stock's done here. Oh my God, I like that one. That's what you want to see. However, maybe the slippage tightens up a bit later. We could check the news as well and see negative news if we wanted to do that. Let's try this one. EW, more granularity in the strike prices. Edwards Life Sciences, wide slippage for the options for today. Let's go 7 days out. Yeah, it's still super wide. Again, that might tighten up a bit later. DQ. Okay, this has got a little bit better slippage. Options, first available options, November 18. Yeah, just 20 cents right there. That's good. Let's see how bad the news is. Now, I'd like 50 here. What's the news? So I'm sorry, I'm moving too fast. I'm just thinking out loud, so I got to slow it down. So we got some bad news here. I would love to sell up here at 50 if the news is bad enough. So let's go over and check out the news. Why did this stock tank? Earnings was last night. So obviously earnings related. This is it says New Energy. So I don't know this company, but I'm assuming it's a green energy company. Post-hire Q3 adjusted earnings, sales, beat on sales. Yeah, and their earnings per share beat. So they must have lowered guidance. There's no other reason. They had great earnings, historically speaking. So they must have, if I dig in here, I might be able to find that. I don't see it in the headlines. So there's some bad news here. I'm guessing future guidance. See if I can see.
Mike, this is a goofy thing, but if you go up into the gear, if you close that, go into the gear on the left hand, where the blue panel is.
The blue panel?
Right up your blue, where the ticker symbol. Yeah, go over to the right. Go over to the gear. Left.
Oh, here. Okay, I got you.
Right there. Click on that. Go into time axis. Right there, and then where it says expansion area to the right, make it like 5 or 10 bars.
Oh, that's great. Oh, I like that.
Yeah, so I've got 10 days, sometimes I got 50, but reason I was saying that is look at your downward channel that you have going on here.
Mm-hmm. Yeah. Yeah,
and what I like is that when you can see more room to the right of this thing, you can see it. You can almost visualize where this may be able to go.
Yeah. Yeah, I like that. Thank you for sharing that. That's great.
Yeah.
So, I could draw a line. I'm not going to get into all that right now,
No,
but a
no,
line of these peaks here, and that further strengthens 50
Yep.
as resistance.
yeah,
If I wanted to trade this now without Tom's tools just yet, then what I would do here is flip this to vertical and then find 50. And there it is, 50, 55, and then click the bid price there. And that's going to give us 80 cents. There's $5 of distance between the strikes. So that's make 80 cents while risking 420. So that's your potential profit in the trade. And what's that, 20%? 80 divided by 420, roughly 80,
yeah, roughly.
20. So there's 19% profit there on this stock as long as it doesn't breach 50. So that's the kind of trades I like. I'm not convinced that I like the resistance level, but I want to know why the stock's dropping. And it must be that they have lowered their future guidance because the announcements they beat on their expectations, but must be future down. So that would be a good trade to consider. Even without Tom's tools, we don't need it. So we could just go forward and manage the trade. So there's an example of how you can use just a broker site. Now this is Thinkorswim. Other brokers have different tools, but it's just a cool way to snipe in the morning. And why do you want to snipe in the morning? Again, the IV is spiked in the first half hour of the day. It's like, there's a lot of volume, a lot of retail trades come in, short covering on stocks that have tanked. Market makers are seeing volume, and the IV's high. So we like to catch them in the morning, but you just got to be careful though, like on Amazon, because Amazon is Amazon. I mean, Amazon's a strong company. It's already bouncing off 98. It's heading sideways. I don't think 110 is in jeopardy, but it could be. It happened on Walmart. So let me pause for a sec. And one other thing I want to cover with you, just real quick here. There's a trade we put on Zoom. Anybody in Zoom? The Zoom Iron Condor?
Yep.
Andrew.
Yes, I am too.
Okay. Well, let me turn it over to you, and let's take a look at your trades. And what do you? Well, actually, let me do mine first. Let me show you mine first. Let me run the portfolio report. If you've done nothing on it, you're doing great. Because now the simple way to handle these trades, and if you'd handle it the way I said was the basic, you're still in. And so now the stock you have this thing expires in at 4 o'clock. What's Zoom doing right now?
Nothing.
I don't know. It's at 83. So it's a little hot.
Share you share your screen.
Oh God, sorry about that. I'm gonna get a shot collar and have Gerardo zap my ass when I forget, because I always forget. I'm sorry about that. Yeah, so now we sold. This is so key. You want to sell at resistance. That's what we did. We sold at resistance. 85, 85, almost 85. It hit 85 on this day. Let's see what the high of the day there was. 85.46. It actually breached 85.46. The rule is to wait until it closes above 85.46. Had you followed those rules, you'd be in a really good spot right now. So now you're looking at your trade, and there's risk. The risk on this one is that Zoom might, by the end of the day, breach 85. It's what, 1.75 points away. So what do we do? Let me ask you, Andrew, what are your plans for this? How are you handling this today?
Right now, what I since it's been trying to go up, but every time it got near 85, if I waited a little bit, it backed off. So right now I'm feeling this, that it's going to do the same kind of thing.
Mhm.
Is that it doesn't seem to want to breach that. So
No,
right now with the whole rule of wait till end of day to see if it does it, that's where I'm at, is to see, especially since we're at this point of this is the last day.
yeah,
Um,
yeah, like that. And that's what I would do too. When's the last, it hasn't been over, above 85. I mean, I guess there it closed slightly above. Let's see. Yeah, closed slightly above there. 85.76 was the close there, but it's just held. So then, it's still early in the day. We don't know what the markets are actually going to do. We can take a look at the NASDAQ /NQ. And the NASDAQ's coming up a bit. What's tech doing? How's tech? It's up a little bit.
You're not sharing, Mike?
Oh, I'm not. What's going on here? Let's do a daily chart here. But this is where credit spreads get a little bit hot. It is possible that Zoom takes a run up, to 85. We're $1.50 or so away from it. And so the question becomes, what do you do? And I'm with Andrew. The way I handle these things, and I've come to this over many, many years of doing them, is I just don't want to experience the anxiety of, well, if the stock, should I get out now or should I wait? And so I lean on rules. And the rule is simply, if it closes above, if it gets, it's 5 minutes to close or 10 minutes to close and the stock seems destined to close above, then I'll close it out. And if we did that, and we don't know what the break even is going to be when it opens here. Well, we're open now. Let's pull it. Let's pull up the latest. I mean, not open, that Tom's tools are live now.
Mike,
So that's
what about rolling up the bottom a little? Is there any, I didn't look at to see if there was any money in it, but it'd go up to 67.
You're talking about, yeah, see, this put spread down here is worthless.
Yeah.
And so one counter move on this, well, see, look right here, we got profit in the trade right now. And so what we could do to lift up this break even a little bit and increase credit, we just buy back this worthless put. And then we could even leave the long put here and then sell something closer. Now,
Right.
I can replicate this. And what I would do here, where is this going to be at 4 o'clock? It's not going to be at 75. So that's a place to look. So then I'll go into Tom's tools. I mean, Thinkorswim. My brain is not working this morning. So because I went to bed at 11 and I woke up at 5:30 as usual. So then
Friday, your brain knows you don't work Fridays.
It doesn't usually work on Fridays. So then, George, I can look at what's available right now. Whatever's here is going to be gone shortly. We haven't got much time.
Well, 75, 74 would be 24 cents.
For today, the 75 puts
That's the 18th, though. What is it? What are we talking about for the expiration?
today.
18? Yeah.
No, they expire today.
You got 18 down below.
80 before you
What?
get anything.
This is, hold on, let me finish with George. So these expire today.
Okay.
So
Right.
I'm looking at how close am I willing to get? And then I'm looking at the option chain here, live option chain, and I'm just looking at the bid ask prices here. And for us to get any kind of decent credit, we're going to have to get pretty close.
Yes.
80 or 79.50. We could get another 5 cents at 79 or 2 cents actually mid price. It's not a lot. It's not a whole lot. The other thing we could do is butterfly it. But it's at this stage with not much time left, there's not much we can do underneath without getting really close. How close would we conceivably get? It's the closest we want to get. Let me go to this chart here. Stocks currently at 83. 80 would be the closest I would even dream of getting on this. And that would bring in 7 cents. And now you're dealing with some heat. So, I mean, I would do it for fun, but I don't. Can we get a mute there, Roberto? If you're, there we go. Thank you. So 80 would be reasonable. I don't think we're going to get down to 80. You could do it. You could add another 7 cents. But then you really got to be careful that the stock doesn't drop between now and the end of the day, which is possible. You know, we get a piece of news out at the end of the day and the market tanks. That's always a possibility. So I wouldn't do it at this stage. Now on Monday when I talked about it, it was a good time to do it because there was plenty of time value left. So if you wanted to be really safe, you could simply buy back your 85, 87 call spread right now and collect a little bit of profit. What I would do, like Andrew, is I would just follow the system and let it ride to the end of the day. Keep an eye on it. Make sure you look at it every hour or so. Make sure the stock's not misbehaving, and then shut it down. Now, if you wanted to close out the upper spread and be absolutely safe, the spread is worth about 25 cents. That's not the right prices. 31 and 30. Okay, so I've got it in monitor. Let's just see if we would close this down, what we'd have to pay for it. So I'll find Zoom here. There it is. And I just want to see if I close down the call spread. There's the calls. Click one, control click the other, right click, create closing order. And what are they going to charge us? They're going to charge us 11 cents to buy this back when in a few hours it'll be worthless. So this is testimony to the fact that there's a lot of IV in the morning and there'll be IV until probably 3 o'clock. So it's going to cost us something to get out of this spread. Now, 11 cents, we pay 11 cents for that spread. We have already pulled in 34 cents. So that would be, let me just close these calls down for 11 cents so you can see what the profit would be. So this would be the safest, most responsible way to take this trade off. So I'm going to go to the calls and I'm going to buy them back for 11 cents. And don't worry about the sell. So that's what it would cost me right now to close down the upper spread where the risk is. Well, the puts are fine, just let those expire. And then I'll hit risk graph and you can see here we would net 13% on this trade if we did that right now, netting $23 a contract. So I would say the most responsible thing to do right now is to do that. Maybe wait for a couple hours. So this 11 cents, depending on what the stock does, but this 11 cents will drop as we approach 4 o'clock, provided the stock doesn't get above 85, of course. So if it doesn't go much further up, then this debit. I mean, remember, 85, the stock's at 82.50, and these expire. So this time value will come out of the trade as we approach, provided the stock kind of hangs here.
Like, do you also look at the cues to know that, like, something like this, or parallel it to something else at the same time to make that decision? Because like the cues were doing well, and now they're starting to they've kind of topped out.
Yeah, I mean, absolutely. You want to look at what the overall market's doing. The Zoom, I believe, is in the NASDAQ. Is it? Let's see here. I think it is.
I can't remember where Zoom is.
Zoom is in the NASDAQ, yeah.
Okay.
So the NASDAQ's popping up a bit. Zoom is with it, but I'm not seeing a lot of follow through on the cues right now. So yeah, I think holding this to expiration, let it expire, keep an eye on it, or most responsibly, just pull it off and grab your nice little sniped profits on Zoom. Okay, so that's me yapping for 40 minutes. Who's got trades? Who's dealing with stuff? What you got? Anybody? Is anybody trading?
So, Mike, the only thing I've got is FISV, the one that was the other day, and I got myself out yesterday. But I'm still holding the 107, 108 calls
Mm-hmm.
that I think are going to expire worthless.
Oh, yeah. 107 way up here. Nice, man. That's
Your
nice.
screen.
You had the one, what was the upper strike, 107?
108. 107 I sold with a 108.
And then what's the bottom put? Or was it?
I got out of that yesterday.
What was the original strike?
96.
Wow. That's great, man.
What happened is I really, I got nervous and jerky in the very beginning of the day
Mhm.
because everything was just, it was going down and I'm like, oh my God, I could lose the max value on this. So I got myself out, and then had I waited till my 10, 15, 11 o'clock number that I always look at, I would have been back in the money and I could have closed the whole thing down altogether.
Yeah. Yeah. Well, that's a smart move. And
Yeah.
you're making money. You're going to make money on this, right?
Yeah.
Yeah, there you go. I love
Hey,
it.
Mike.
Yes.
Yeah, I can't share the screen, but I would describe. I have a PDD, the short-term credit spread, which I adjusted to the butterfly,
Mhm.
and so my strikes right now are 53, 52, 51,
Okay.
and
Kind of trading blind. What I could do is so pin duo is spiked up. So again, this is what the system's, you're going to take hits. And so what I did on this one.
yeah.
So what I want to do, Peter,
But
is
today's close is a
what?
it's a 51.82. It's between my wings, and if I just keep it
Peter,
until
hold on.
it expires
I
today.
gotta build the trade so we can see what you're dealing with. So that's what I'm gonna do now. First off, did you adjust yesterday?
Okay.
What day did you adjust?
27th. I adjusted on the 27th.
And so my question for you first off would be, that you missed the day before was when it was screaming for an adjustment.
Yes,
Wait.
and missed that, so I did. Yes.
Okay. So everybody use alerts and things like that if you want to manage. You don't want to miss your adjustment time. So if we showed you how to do alerts this week, and forgot which call it was, but we did alerts, and it's important that you put structures in place in your life such that you don't miss alerts. I know, Peter, you have a busy job, and Johnny does, and a lot of you do. So you've got to figure out, and especially if you've got, hold on. Especially if you're trading this strategy, because this is like Wild West, man. You're in a gunfight, so you got to do it. Yeah. So what did you do on yesterday?
So I sold more 52s and bought 51
Calls or puts?
calls. Yeah, I didn't do puts, and
Okay.
after I did it, I thought that last time we did puts instead of calls. So
It doesn't matter. They're the same for the most part. So you sold the 52s, bought the 51 calls, or 50. What did you buy and sell? 52.50 or 52.51?
52.53 was the original one. So
No, I'm saying your adjustment. What was your adjustment? What'd you do? You sold the 52 calls and bought the 50 calls?
51.
Okay, so you bought the 51s. Okay, and what did you on your original trade? What was it again? 52.53?
Yes.
Okay, good. So I'm just trying to replicate what you did. And then what was, do you happen to remember your credit for the entire spread that you added, or you don't have your risk graph up?
No, but I can check it.
Okay, so what Peter did,
The credit was
was what?
so for there was the $10
You did that for $10? Okay,
was
$10.
for 11% 2 days.
How much did you sell the credit spread or buy the call spread for? You paid 10 cents for it? I'm just trying to replicate what you did.
Sorry, I didn't hear you.
What did you pay for the call spread?
Okay, so
You can see it on your broker's site.
Okay, let me see.
All right, while you're looking for that, I'm just going to talk to it based on the end of day price. And so what you did pre and post adjustment, I don't really do this adjustment on the short term ones. It's just it's just not worth it, quite honestly. So let me turn off the adjustment. So this is unadjusted on the day you exited, right? Your max risk in the trade was 445, and then you bought
Show
the,
your screen, Mike.
and then you bought the, thank you. And then you bought, so this is the trade unadjusted. Adjusted a day too late. You're currently down 230 bucks on it. And then what you did was you butterflied it. You completed a butterfly. You bought a call spread underneath such that the 52 strikes overlap. You're selling some more credit there and buying some protection. And then your risk dropped from 440, max risk dropped from 445 down to 337. And so if you look at this, you're down 227 and you could lose another $110. And that's probably going to happen unless this stock ends up at 52 by 4 o'clock. So this adjustment is really not particularly valuable because first, a lot of reasons. It does reduce your overall risk, but you're not going to make any more money unless the stock ends up in this very narrow break-even range. And let's see where the stock is right now.
yeah, so it's 51.82.
So it's at 50.82, yeah. So the stock is currently, well, the lower strike, yeah. So your stock is underneath here. So that's where we are today. That is today. No, that's not today. Let's go take it to today and see where we are. So now we're at max risk. Oh, wait a minute. Let's see, stock's 50. Oh, it was at the open 51.59. Now it's at 50.81. So it opened well and then it's dropped. So now you're in this precarious position where, you know, it's going to be bouncing around. At expiration, you're either going to make money or you're going to lose it. You're just not going to make money on this most likely. And so when you only have a few days left and the butterfly's narrow, the batten down the hatches adjustment is not useful. So the next question becomes, what do you do?
Right.
Yeah. So first off, don't do that adjustment. Let me zoom in a little bit so we can get a little bit more clarity. Let's zoom in from 48 to 58. I don't know. 48 to 58. So your break evens are between 52.33 and 51.67. The stock's currently here. It could be here. It could be here. It could be anywhere. And at 4 o'clock. And so here's the thing to deal with, though. So you've got options that are all currently out of the money, which means if the stock is trading at 50.68, looks like it's dropping here, then that 50.68 is beneath all of these call strikes. So if the stock is at expiration below 51, there's nothing to do. You let the whole thing expire. The problem right now is if you try to buy anything back or sell the butterfly, the slippage is quite wide. So they're gonna hammer you to get out. This is the thing about trading on expiration Friday. The slippages are pretty wide throughout the day and they start to really dry up in the last hour. So exiting or managing or adjusting trades at this stage is a bit tenuous. And so the position you're in now is, you got to kind of be there at 3 o'clock and watch. There's nothing more to do. You're at max risk already. 340 is max risk and you're there. So the stock's here. You're at max risk. At this stage, you might get lucky and the stock pops up here. Imagine it's trading at expiration right here at 51.47. Then you're only going to lose $100. So this is not a bad place to be. You're already at max risk, but you got to be ready at the close to see where the stock is.
But so do I do something when it's closer to the end of the day? If it stays at the same level as it is right now?
Yeah, and it depends.
Mhm.
So what you want, are you clear about the concept of in the money?
Yes.
Okay, so what you want to deal with at 3:30, 3:45 is you want to close your in the money options.
Okay.
The other thing you could do is put an order in to sell this butterfly. So you paid, and I don't know exactly what you paid, but by end of day pricing, you paid you have a net price per contract of this in this butterfly for 68 cents. So if you could sell it for more than zero, then your 68 cents will reduce. So for example, you could put an order in right now to sell this butterfly for 10 cents and just have it sitting out there just in case. And then you would pull back $10 per contract. That's one thing. Or maybe get aggressive. I want to sell this butterfly for 30 cents.
Mm-hmm. Okay.
And then you might get lucky. And then other than that, you have that line in the water. This is what I do a lot. So I got butterfly. It's in a really tenuous position. I could be in the money on one of them at expiration. So what I'll do in the morning is just put a line in the water. Can I sell this for 30 cents? Just put it in there and then watch. If you don't get it, then you cancel it. And then at the close, you need to close down your in the money options.
Okay.
Does that make sense?
Yes. Thank you.
Okay. You're welcome. Thanks for the example.
So
Yeah.
Mike, this other one I've got is First Solar. The thing that I did yesterday.
Yeah. Can we see it?
Can I share my screen here?
Yes, it's turned on.
Right there. Share.
Just closed.
So yesterday, when I did this, First Solar comes up. I turned around and then the initial was 142, 141, 121, 120. And I'm like, that is way too narrow of a spread on this one. Just because when I was looking at it, the bottom side was up above where the bottom really was. So I had actually spread this to go to 118, 117 You made the recommendation that, you know what, I would spread that a little bit more. So I then turned around and I went to this. And as it works out, what had me nervous as could be is first thing this morning, when they announced earnings, we're down at 116, right?
Mhm.
But now it's sitting right here and it's actually sitting in the backyard. This one will most likely expire worthless today and take a
Yeah.
big profit.
23%. Boom.
So, you know, when I first did this is at 36% max profit, but it was so tight here, and knowing Apple was announcing and all those kind of things. You know, I just thought I'd share with you kind of the thought process, the things that I'm going through, making sure that, you know, those are the kind of things that you're looking for, right? That we try to get outside these gaps.
Yeah, yeah. Nicely done, man. I love it.
I
Congratulations.
love iron condors. I'll tell you what, I'm making money on all of them so far. And I know they're risky, but you know, when you turn around and talk about driving this thing down to, you know, like 23%, I'll take 23% all day long for, you know, a couple of days or overnight.
You would?
Oh yeah.
Yeah, that's great, man.
Thank
Congratulations.
you for posting that, because I took it on and it just closed. My
You
GTC,
closed it?
the GTC closed.
What was
I
your
had a
rule
GTC
there?
in place, so it closed.
What's your rule for closing them down with a GTC?
I'm still looking for the 80-90%. And then I watch the market itself. But this one closed. I forgot I had the GTC in, and I was figuring, okay, I'll let this expire. And I just noticed in my order history, it closed.
And so you buy them back for 10% or 20% of the original condo credit?
Yeah.
Okay. Yeah, it's a good rule. Congratulations.
So Andrew, because, you know, let's face it, the other one I'm still in is, Andrew, the one that you did on Coca-Cola.
Yeah.
I'm still sitting in the Coca-Cola one as well. You know, we're still doing okay, and it's Coca-Cola staying right inside the backyard. So, you know, again, well, thanks to you spread that out for us and, you know, really made it so it makes some sense.
Yeah, Coca-Cola right now is up to 60.28.
Yeah. All right. And our call bottom is at 65.
So what I typically do, if I'm still sharing,
No, I stopped you, man. Sorry. Go ahead and reshare if you like.
okay, hang on a second. Screen share. What I typically do is once I do these, I put my rails on. I draw these lines, and all I do is I watch very closely as to where this thing is in regards to these numbers. And if it's getting too close, then I get a little nervous. But the other thing I've got is you're seeing a boatload of lines, right? But here's the 200-day moving average, which the 200-day moving average is still below the 62 number that we have. So, you know, for me, I'm thinking that, you know, Coca-Cola is going to hit the 200 and then maybe pull back would be the worst that it's going to get, but time's on our side at this point.
Yeah, this expires today. I think you're in good shape. The other thing you could do, maybe illustrate this, Jeff, is to tighten up your upper spread and just see what that looks like. That'll reduce any risk up there in the event there's a run. I don't think there's a run happening all the way up above at the 200 by the top of the market.
Yeah, so I could probably adjust this and make sure that I make even better make out better. And because this is useless down here, obviously, right? Down here, it's not.
Yep.
But that's what I typically do. So like, you know, what you, Andrew, with what you're doing is, as soon as we pick the numbers, and it's just like the one I did with, you know, first didn't have a chance to even put them on yet. This is gonna expire today. I would put these on, and all I do is it's a quick reference. When I just type in First Solar or Coca-Cola, I just look at my lines. Am I in it or am I not? And if I am, then I move on. But again, Mike, you see how much room I've got to the right?
Yeah.
So, but, and all this is volume profile is what all this crap is over here.
VWAP. Yeah.
Well, the VWAP is the blue line. It goes blue line, yellow line. And right now it's hitting those. Normally if it goes through it, then it's going to be powerful to the upside. If it hits it and retraces, then it's going down.
Mm-hmm.
So, but again, I use these, especially when I'm looking at the markets and looking at different things, and it's just like QQQ, right?
Right.
You know, the Qs right now are just kind of, they're moving, you know, halfway decent, but they're still running into resistance on the previous day.
Mm-hmm.
And I think there's going to be a sell-off on this in the afternoon.
I would bet.
The
so.
buyers are going to go away.
I think you're right. I'm just
So,
looking at.
but that's kind of what I do is I have guardrails on different things.
Mm-hmm. Yeah, you got a good little directional system there. All right, good. Who else? Anybody got trades on they're dealing with?
I just put on Meta.
You did? What'd you do?
On the bottom side, a 90.88, and on the top side, 124, 126 on November 11th.
So you did a Iron Condor?
Yeah.
Okay. Can we see it?
And you sold this, right, Andrew?
Yes. Let's see. Meta. Is this it?
Oh,
Yeah.
Gerardo, we had a lot of people show up this morning. Maybe we got to do these occasionally.
This is really great. It's really helpful to hear experienced traders. It's very helpful to those of us who haven't traded this for very long.
So is that
Yeah.
showing?
Yes.
So yeah, the big thing I was looking at was, where is this top? And I wanted to be lower, but I kept on looking at these numbers and finally said, 124, I can't get closer. And then the bottom side, I wanted to be down at 87, because that was at 87 after, then I can go down to 85, because once you hit 85, the next strike down is 80. And I didn't want that big chunk of risk. So once I couldn't do the 122 on the call, I moved the bottom up, and 90 was as close as I was willing to get. It hadn't been down here since, as you said, 2016. So it felt like, despite this big drop, coming down another 10% below 100 was unlikely, especially since it's been 2 days now. So
yeah,
this could work for 14 days. Gets, and it's the 20% number.
The only reservation I have about this trade is if you look at the 124, 126 call there,
They
these
are
sold
tight.
for 4 cents. So that's $8 up top.
Yeah.
So yeah, I mean, it's something, but anyway, what's the probability of profit on this one? Probably pretty high.
20% of probability, 54%.
That's pretty good for an Iron Condor. I was just looking for broken wings on Meta. I first off, I was looking for a butterfly to see if there were any butterflies out there, and there weren't. At least now. Maybe when the data gets reset again. Another way to approach these is you put you could tighten up your Iron Condor, make it into a butterfly, sell the same short strike at 100, and then put a broken wing above one below, and that's not a checkmate exactly, but it gets pretty close. And so then what you do, and there wasn't one that came out of the scanner. I'm not sharing my screen just now. I'm just doing a quick look to see if there's any broken wings on Meta. Well, let me do it. Let me just share it. What am I doing? Hold on a minute. So what I was doing while you were sharing, Andrew, was I was listening, and then I just quickly ran a butterfly. This is a balanced butterfly on Meta, and I tried at the money call and put, and there weren't any. We could build one, and maybe I'll do that too. So I'll come back and do that maybe, but let's take a look and see if there's any bull and bear broken wing butterflies. I think this is a sideways stock. I think just going sideways from here. So if I was able to put a butterfly on, before I did it, I wanted to make sure that I could put on perhaps a bull and a bearish broken wing butterfly on Meta. And so I'm just going to go through the progression here. There aren't any for zero debit or a credit. All right, I'll pay a little bit. And there is a bear, and let's see if there's a bull. There are. So there's a bear and a bull. Longer term trades, 35 days. It's not ideal. And the reason it's not ideal is that your butterfly is not going to make any money for a few weeks. So one's a 21-day trade. Not ideal. Not ideal having such a long time frame on the bullish one, 35 days. That's what I don't like. The other one's 21 days, that's better. So this one's 14 more days. This one's not going to pay as quickly as the 21-day butterfly. So it's really important that you sort of grasp this idea that the shorter butterflies expand their wings at expiration. So the longer you have to wait for them to expand their wings, the longer you have to wait to have that trade be potentially profitable. So I'm not seeing it all line up here on Meta. And so I'll pass on it for now. If we go back to the stock, it's just channeling at 100. So ideally a balanced butterfly. Andrew did a condor. That's another way to trade it. We could also go into the scanners and say, find me a condor. So we have a condor finder. There it is. And we can do just a regular at the money iron condor search. This is what Andrew built himself, but this will give you some options. Probability of profit, probability of stocks between the break evens. So of all of them, this is the one that's offering the highest probability, 18%. It's going to be narrow. The potential profit is 326. This is a 21-day. Andrew, what'd you use? November 11, right?
Yeah, November 11. I didn't want to go out that far.
Yeah, I'm with you, man.
I looked at the 18s and the money and salivated and said, forget it.
So this is almost a butterfly. That's almost a butterfly. The strikes are quite narrow.
Yeah.
The total risk in the trade is $23, and so from here, those other broken wings kind of make a bit more sense. So we could play with that a little bit if you want.
Yeah, given the amount of time, the thing I might, I figure might be worthwhile is see if it's settling that, for, either later today or Monday, and then maybe adding, a double broken wing on both sides of it, because then you've got less risk involved than the iron condor. And if you run into trouble with the iron condor, then the broken wing butterfly helps you out.
Correct. You want to be if you've taken the hedge fund course and you have the scanners, what Andrew's describing is a really good way to checkmate. So here's a bullish broken wing that we could put on. So if we started with this little, we could even tighten the strikes. We could build this ourselves. I might do that in a minute, but you could, you're worried about the downside risk. No problem if you have this on. And then you're worried about the upside risk. No problem if you have that on. And so if you put those three together, you've got a really super duper profit zone. What I'll do next is, let's just overlay. I gotta find, there's my demo folder. Okay. Let me put a period there so we can find it easier. Okay, so I'm gonna stack these up. Drop this into demo as well. We got a bull and a bear, BWB, and then we have this iron condor, and we'll save that as well. The only problem we have, it's not really a big problem, but we've got a 35-day butterfly. That'll still help you, though, in the event the stock rises. It's just not balanced in time with this one, which is 21 days. So this bear will pay faster than this bull. And so the next thing I want to do is just massage this a bit. I'm going to duplicate this trade, and let's just drop the expiration to 21 days and see what it looks like. And I can tweak it a bit. So I'm going to edit this trade, and let's drop it to November 18. Is that the strike expiration? Yes. So I'll make this November 18, just see what it looks like. I imagine the debit's going to be a little high, but we'll see. Yeah, it's 36 bucks. So the debit is a little hot. So I'll just stay with the original. So they're not ideally balanced in time, but still, if the stock starts to drop on this one, you're going to be making it back, some money back on this one, and vice versa. So let me overlay these, which is what I was about to do. I'm going to do a pair. So I'm pairing the bear and the bull. Pair it. It's not going to be as pretty when their expiration dates are different. See? So it's a little more difficult to see what's up. Yeah, so this the longer term trade is being the last 14 days are being cut off, and so this just gives you a 14-day view, and you can get a feel for how much profit there might be with 14 days to go on the bullish one. Now, if you are 14 days to go and the stock's up here, then you'll have another 2 weeks to massage more profit out of this trade. Okay, so that's the drawback of having different expiration dates. So you couple this trade with this trade. Max risk here, 23. On the overlay, down here, a whole lot more than 23 bucks of profit on one contract. Here, with 14 days to go on that one, you're making 9. So the way that would work is if the stock started going up here, you're dealing with this winning bullish credit spread butterfly, and then you dump the condor, and then you just trade this one or adjust the condor. Now that's how I like to trade. I know it's got a lot of moving parts, but if you're compelled by being able to really checkmate the stock, not 100%, but virtually checkmate the stock, and give yourself plenty of opportunity to adjust. You don't care where the stock goes. You might have a slight preference, but you just let the stock do what it's going to do, and then you have 3 trades to manage. So how do you all feel about that strategy? Who finds that compelling? Who thinks it's too much? Any comments?
I like it.
Yeah, it's pretty cool.
Need to do a lot of paper trading.
Yeah, George. That's music to my ears. Yeah.
The hard
right.
part is making sure that you accept the idea that you want to stay away from where the stock is. And that, that hurts you on the profit side. But if you get close, you get burned.
Yeah. Yeah. You will eventually, even if you get lucky. You'll
I've
get
been
burned.
burned too often. That's
Yeah.
why I'm trying to stay farther out. And then add in the butterflies are new to me, but it feels like a way to deal with when the stock moves where I don't want it to go. And I can't do anything with the credit trade.
Step one would be to learn the butterflies.
Yeah, it would help.
I haven't done any butterflies or broken wing. I've just watched a few videos on how to do them.
Yeah, we need to get a hedge fund class set up. I think today Tom and I have been so busy. I need to talk to Tom about putting together little master classes and providing the button. You got to have the button to do broken wings as well as the other strategies. All right. Well, let's take one last look. Unless there's any questions. Again, the purpose of this call was to be in service of you as you're dealing with managing trades in a broker's environment. So we'll do more of these calls. I don't know how frequently. Maybe every week or every 2 weeks or something. We'll start doing these. And
I have a DNA question.
yeah, please.
I'm looking at Disney 107, stocks at 104. Should I DNA?
Can we see the risk graph, please? Yeah, that was a trade we did a while back. Yeah, I would say without even seeing, if you can pull the risk graph up, that'd be great. And whether you do or not, the stock's bouncing up against 105, which is resistance. And your short strike, your long strike is 104. Is that what you said? Oh,
George, I think you hit your mute button too.
okay. You've already rolled it up to 107. Excellent. 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 Let's look at the risk graph. Your delta is -17, which isn't that big. The stock currently is at 104.64. So that's about where the stock is right now. You're muted, by the way, George. We can't hear you. Nothing. You might delta neutralize. You're at 107. The stock's at 104.
It's about an 18-cent credit to roll it to a 104, and 18 to a 105 also.
Okay.
Now I'm unmuted.
Okay. Thank you.
Should I roll it down, up to 107 or down to 104? I mean.
Yeah. I mean, it's not going to give you that much benefit. Your delta is pretty small. What's Disney doing right now? We don't want to delta neutralize too much, everybody, because that's part of how we make money on these. We want to let the stock breathe a bit and grab some delta and then scalp the delta by delta neutralizing. The stock is dancing with 104. It's at resistance. Your long strike, sorry, is 107. I don't think it's getting above 105 or one. So yeah, I would say, yeah, it wouldn't hurt you to do it.
Okay.
Yeah.
Okay. When I have two like that, I also have coin. It's about 3 points. Let me see if I can find coin here. Hold on.
You can go to your trade selector there.
Here we are.
That's good too.
Here's coin.
Okay.
That coin will give you about 50-cent credit for a roll from like 74 to 70. It's probably where you're at.
Your deltas, I could already tell by looking at your delta. There's nothing to do on this one.
Nothing to do. Okay.
You got how many? You got 6 days left. IV's coming in. You got a good shot on this one.
Yeah. Yeah. Losing $4 right now. Okay.
let me pause for a sec. One way, when I saw the dashboard and George was asking, could you put it back up there real quick, George?
Sure.
Delta was -2. And I didn't even have to see the risk graph. I knew there was no reason to delta neutralize because the delta was -2.64. And there's no neutralization that could be taken. That's as close to zero as you're going to get,
Yeah.
pretty much. So that's one clue. When that delta starts getting big, I'd say, one rule of thumb is if your delta is 10% of your max risk, which in this case would be what, $111, -111 or +111, then that's certainly a time to consider delta neutralizing. Rule of thumb, by the way, rule of thumb. Also at support resistance is a time to delta neutralize. Or if you get a nice 20% profit, delta neutralize. Now, the issue with delta neutralizing too much is that you're not going to make as much money. But on the other side of the coin, you'll lose less money. So there's and it's not an absolute, it's a fuzzy area. You don't want to delta neutralize too much. So I try to give rules. Delta neutralize at support resistance, delta neutralize, I just gave you a new one. If delta is 10% of your max risk, delta neutralize. Those are the kind of rules that I have. 20% profit, you certainly want to delta neutralize, but give them room. Give them room to make money. If you continue to delta neutralize, the only way you're really going to make money is if you over delta neutralize, you're going to primarily rely on IV rush to make money. We need some delta in order to profit on these things. So don't delta neutralize too much. Let the stock breathe. Come up with some basic directional analysis. Right now I look at coin. It looks like it's dropping from resistance. So I wouldn't, and you don't need to now anyway because it's close to zero. And give it some room. Give it some room to breathe. Okay, we've been going an hour and 22 minutes. Anybody got anything they want some support with? Let's take a look and see. I think that's a no. Let's take a look at the markets here. SPX. Let's see what we're doing here. Huh.
Dow is up 500.
Yeah, that's right. I saw that. DJX is the Dow. Wow. Crazy. Let's get this straight. Tech is getting, crappy earnings on tech. Fed meets on Wednesday, raising interest rates. Inflation is high. Consumers are still spending. The GDP is rising in a high inflationary environment, and the market rises. Doesn't sound like that's sustainable, but it could be. You never know, man. All right, let's see what the NASDAQ's doing real quick here. Heavily tech-laden NASDAQ's popping up. Let's take a look at Meta. Meta's flatlining at 100. I like iron condors on that one. Microsoft is rising a bit. Now, we have a 240 call spread on this thing. You want to start thinking about selling put spreads underneath if the stock begins to ride. And even if you don't want to do that, just follow the rules. Let 240 resistance do its work. Even if the stock bounces against 240, is above it during the day, wait until 3:30 or so, 3:45. If the stock appears destined to close over 240, then buy back your spread for a loss. That's this world, everybody. It's not for everybody. Google looks, it's not recovering to the same degree that Microsoft is, and our short strike is at 98. So if you start seeing a floor get in and come underneath and sell put spreads underneath, and that'll mitigate any risk up top. So that's a move you could choose to make. And we'll see what the markets do. Maybe Monday morning on snipers, we'll play around with condorizing our sniper credits.
So, Mike, you would close it out at the end of the day versus let it ride till Monday morning to see if people get their head on straight and drop on Monday?
No, I wouldn't do that if the stock. Let's pull up Microsoft. That's the one that looks like it's in more jeopardy. So
I mean, it's
here's the
starting to turn over, but
thing. So what you're saying is like at 4 o'clock and the stock's at 241 or something. Would I hold
Yeah.
over the weekend? No, I wouldn't. And because we're counting on the market behaving a certain way on the following Monday. And we really don't know what's going to happen on Monday. And so standing in risk management, it's like then you become in a position where you could lose more money on Monday than your rules would dictate. And rules-based trading, risk management first, would dictate exiting even if we have 2 days of time decay working for us. That's the flat answer on that.
I typically follow the rule, don't let hope and faith get in the way.
Yeah. Then you'll have a shitty weekend and
Exactly.
I don't want that. I don't like that anymore. I used to do it. I'm speaking from a lot of experience like you, Jeff. I've done a lot of credit spreads and I don't enjoy the experience of dealing with inevitable losses. And when you lose on these things, you lose a lot more than your credit. 2 to 3 times your credit is typically what you're going to lose on these things. 2 times if you get out at the break even.
Do you get into, I mean, the one I've done this morning is I sold a put spread on X on steel, US steel, because UUP was going up.
Yeah.
So, but I've got a 19 and 18 spread.
Okay.
Sold the 19 and bought the 18 is really what I've done for 33 cents.
What's the expiration?
November 11th.
Okay, so you got 2 weeks.
Yeah.
It's kind of like I'd be a little concerned about this hammer pattern here. And 19, I would right now immediately I would sell the 22 as above.
So you would be selling a call spread versus a put spread. See, I sold a put spread looking at this is going to move back up.
Yeah, I don't know what your directional system is. If you have something that you rely on that predicts bullishness and it works, then
it's called drawing your line at the bottom of all the candles that you see there on your screen.
Report, yeah. So this is I call this jumping in front of the train. I did it on Chipotle one time. Just to give you a little story, I was teaching a class in New York with a buddy of mine, Nick Gazzolo. He used to teach at Optionetics with me, and Chipotle came out with good earnings, and it gapped up.
Oof.
And let me show you something here. Let me see if I can give you an example. Visa might be a good one. So what we did was it was total gambling. So I'll admit that. So Chipotle did something like this. And there wasn't a 200-day average. It was at a all-time high territory. And we sold a call spread above, literally jumping in front of the train, counting on a fade, hoping actually for a fade. And then for lunch, we went to Chipotle, which is next door. And then Nick starts saying, "Hey, Mike, did you hear that they found rats in Chipotle's meat?" Out loud. We needed the stock to drop. And it didn't. It actually kept going up, and we got smacked on that trade. So I used to trade like that. I don't anymore. The reason I'm so hell bent on risk management is because I've gotten hurt by not doing it and hoping. And
I did one on the Qs for today, expiration, the 250 puts, but I bought them on Monday for a nickel. And yesterday they jumped up to, I was up $410 because I bought 40 contracts at a nickel, right? I put $200 at risk. And yesterday it got up to 17 cents at the close. So I sold 200 of them or 20 of them. So now I'm just sitting there on lottery. I'm break even.
now, when you said you bought, what'd you buy?
I bought the QQQ $250 puts for a nickel.
Oh, I got you.
So what I was doing is if, thinking Amazon and Apple and everything else, it all goes south. I mean, if you look at early trading on all that, the Q's dropped to 265. That thing would have been at like 50 cents on 4,000 shares. I would have been up $2,000 with a $200 investment.
Yeah, yeah.
I mean, so I do that once in a while. When I make money on some of these iron condors, I'll take 100 or 200 bucks and, you know, throw a wild trade in there. And it's amazing. I'm about 50% when you do stuff like that.
Yeah,
At least get back to break even.
Yeah. As long as your winners are outpacing your losers in terms of profit.
Yeah.
It's just, that's a system. And those people trade that way. Some people like the juice of this game. And if you can stomach the losses on them and
Now you know why I like the 24-hour condors.
Yeah. And you keep your eyes on the forest versus the fallen trees. 50% of them are fallen trees, and you're still making money, and you can stomach it. Yeah, why not?
That's what your their whole risk management strategy about how to get, if I can get the original investment off the table as quickly as possible, and now I'm riding on the houses, then I try to do that as often as I can.
I'm with you. All right, everybody, that's a wrap for today, unless there's any other questions or comments. We'll do more of these. I'm not sure of the frequency, but I think it's what I really want to do on these calls is support you, and you're dealing with brokers and exiting trades. So that's what I'd like you to bring. And if you're not in trading real money, then please at least get into a simulated environment or do one contract, but you need to get into the game. Get into the game. That's the only way you're going to learn it. And we're trading in front of you, and all that's useful, I think, but I'm just checking the comments here. Okay, everybody. I think that's a wrap for today. I've got to go look for houses and stuff. So thanks for joining, everybody.
Thanks,
everybody.
Mike.
Have a nice weekend.
Nice weekend. Pura vida.
Pura vida.
Thanks, everybody. Thank you, Mike. Thank you, Gerardo.
You're
Thanks,
welcome.
Mike.
You're welcome.
Very welcome.